Cecile, welcome. Welcome to Tradespoon in Yellowtown. My name is Vlad Karpel. I'm CEO and founder of both companies, and today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, if you're on Discord or YouTube, the difference between Yellowtown, Tradespoon, and maybe some of the other services out there is that my background is technology. I was a CTO executive of several fintech startups here in Chicago, worked with hedge funds, broker-dealers, and was able to build a team of financial engineers that are heavily invested in the AI and generating signals, training on the data, learning on the data, making inferences, generating signals. And then I use this, and I've been managing live trading room every morning and closing bell. Disclosures are very important. Please read them. If you need to seen these disclosures before, I encourage you to visit the link on your screen, optionscreening.com, so you can understand the risk associated with trading stock or options. I'm not a financial advisor. I'm not registered with FINRA nor SEC. I'm showing you what I do for information purposes only. Please consult your financial advisor prior to making any trading decisions. Also, should not be assumed that the future trade this will be profitable. All right, let's jump into market and see if anything has changed. Let's do Tradespoon. So model predicted for today. Maybe I should actually. No. Support is 578, overhead resistance at 584. Still negative trend, right? Model, we've been talking about the market has been overbought for quite a few weeks. Today low print is 574. So model is correct, right? Potentially we could see 565 in the next 10 days. I would not be surprised. But in terms of positioning, so we retested the breakout. The first, the break, we were able to hold on to those levels, and that's your support, 574, 575, kind of defense, right? And in terms of bar chart positioning, right? We talked about positioning. Right, if you zoom out, let's just look at 1025, where we have 1023, 24, 1025. We have 1101, 1115, and 1220. Okay, so going to December expiration, model sees a lot of overhead resistance at the 590, right? I did say that this is November 1, going into elections. 585 is the overhead resistance. Big position at 590. Probably the highest open interest is 590. Sorry, give me 1 second. I'm going to tell my dog not to bark. Sorry about that. I'm back. So yes. So 590. We talked about that. If you have spiders, so you long the market, potentially selling the 590, 600 call spread makes sense. We are at 580, very large position at 580 right now. Market is acting as a magnet at 580 level, and we did retest 575, which is high open interest. And next is 570. Actually, there's not much gamma after 570. All right, let's double check. So 590 is the largest strikes. So we do have 570. Then the next large gamma is 560. So pretty large position in 560 level, right? The 50-day moving average. 560 position is kind of deteriorating, and we talked about total gamma for November now it's increasing. So I think it was like 2 billion, now 4 billion. Now after expiration, it's about 4 billion in puts and 2 billion in gamma in calls. So 6 billion. It's still pretty low historically, right? We've seen 40, we've seen $80 billion. So this is a pretty low positioning for now. So even small deviations like beige book, which has been negative for, I think, many months now, can cause these pullbacks, right? I still think it's short-lived. Probably, if I have to think 50-day, at least as of right now, I don't think we're going to break 50-day moving average. Something has to happen in the market to break. Maybe earnings, will disappoint. Maybe banks and wealth management was an exception. Right, and continues to pull back. You can definitely see industrials, kind of General Electric had a sharp pullback, but almost closed the gap today. We had Triple M yesterday, decent earnings, but did pull back, right? Initial reaction higher, now continues to sell off. Good that I closed Triple M. This is a good example where you don't want to take the risk of stock trade, right? Because it can go up, how much is it? 40%, or it could drop, 10%, right? It just made Triple M made 10% move, and you can see industrials in general are overbought. They were the leaders of this rally, and so far after the earnings, initially we talked about 30 level, 29.5, I think is a breakout. I would keep an eye on it. False breakout are dangerous, right? If there's a false breakout, especially after consolidation, you could have sharp pullbacks. But if it holds, then usually there's a continuation. So at this point, I would watch and see what happens. I mean, interest rates are going one way, and silver is reacting. So we'll see. Copper is down. China slightly down, which is interesting. Bitcoin, right? We talked about breakout in Bitcoin. Looks like also potentially could be a false breakout because it's above the downtrend now. Kind of retesting this downtrend. Crude oil pulling back. Nvidia down 3%. So a lot of it technology, I think. Materials kind of not pulling back. Okay. So that's good news. Builders stop pulling back. So I think it's kind of technology is now following the rest of the market, but so far it's not dropping a lot. Industrials are holding in. So today it's technology, right? High beta stocks are pulling back. Consumer discretionary, QQQ, semiconductors, XLK. So yesterday it was the value. Today it's the beta, high beta. So, okay. We'll see where the market closes. Any questions so far? Brad, Aisha, Cecile, how are you? Any questions on YouTube? Let's see if the house is full today. Okay, a few people watching. Thank you. All right, let's quickly go over through some of the positions. So, I did text this instance on my personal account. It actually did reach the 2.5, almost 205 level. Again, one standard deviation was $4, 8 is two standard deviation. GE finally rebounded. I was worried about if you did the 175 strike. I talked about if you did the 175 strike. Credit put spread, then you need to hedge. But at this point, it's back to 185, 184. So that I think I did 175 strike. So 175, then at this point, it's most of the premium is gone, so you can close it. FCX kind of initially went to the strike price, but now rolled back. So it's either has to jump to 50 again or drop to 45. But at this point, it's kind of no reaction. Netflix pulling back after strong earnings. Wells Fargo slowly going down, but uptrend is still intact. Netflix, these are some of my positions are intact. Wells Fargo is intact. ExxonMobil. ExxonMobil kind of consolidating, going into earnings. No big move So that's good. Bank of New York. Looks like pullback and now stabilizing. So still long Bank of New York. We talked about an energy EOG. Broke to the 50-day moving average. It's a 200-day moving average. I'm getting close to that 50% loss. It's trading at $2. It's November spread 130, 125. So we'll see what the earnings look like on some of the energy names. We'll see. LA Lilly. Still on LA Lilly. LA Lilly did pull back to give us the market, but holding on. It has earnings in a few days. Let's see how many positions do I have left. I have one. Okay, so maybe if it does drop further, maybe buy another share. Okay, so I do have LA Lilly Meta spread announcing earnings in a week. So Meta is going to announce earnings. Next week is going to be all the big negative technology, not all, but Netflix, that's doing well. SH. So I do have a small hedge in SH. It's up, maybe. I wouldn't add, in terms of adding to the shorts, I would wait. The problem is, I would wait if this level breaks down, and you want to squeeze till 565, then maybe, right? So that's kind of 1.5%, 2%. So I would wait and see if we're going to break the lows. If we do, then I think next level would be 565 to be retested. But otherwise, I would just wait. Silver and ExxonMobil, right? So silver. I would be a buyer into pullbacks, but I'm watching if it's a false breakout or if it's just kind of consolidation. For now, I think it's consolidation. We talked about ExxonMobil. So those are the positions. I am watching NVIDIA. I do want to add NVIDIA. This was a signal. Monday, Tuesday. But I want to see kind of where it shakes out, right? If there's more to this pullback. So, but I think 131. 124 is where you want to start thinking about buying NVIDIA. Any questions? Jan, welcome. We have new trader. Perfect. Thank you, Jan, for joining. Let me know if you have any questions. And if you're a Yellow Tunnel or Tradespoon subscriber, just type in inside of the questions. Would love to learn more. Any questions? All right. Let's talk about earnings. So today, I think interesting earnings were Texas Instruments. Right? They actually did better, right? We had kind of a mixed bag from the semiconductors. Time and semiconductor expected earnings, it rebounded. Texas Instruments better than expected, rebounded. Obviously, ASML kind of the opposite, missed it, and created the initial pullback. So for now, it's kind of mixed reaction in terms of earnings on semiconductors. AT&T actually jumped. I don't think it broke any levels, but it's positive reaction. It's trying to break out 22.48. So AT&T is continuing to grind higher, and Verizon got bad earnings. And so far, AT&T the past couple of months have been a good. Not going anywhere. They have a lot of problems. Somebody asked about Boeing. So we have Tesla, we have IBM, we have LRCX, another semiconductor. How's NextEra Energy? That's a popular utility. Popular utility is doing well, trying to break out. Somebody asked about GD. Carol, I think, not here. He was wondering if GD is going to follow NOC, and now let's see if we have an answer if it did. Hello. Yeah, but my connectivity is not that great. Can you guys hear me? Is the audio still good? Because I think my connection is still shaky for whatever reason. Seems like it comes and goes. Can you guys hear me? Good, lovely, good, okay. G. Oh, here we go. Yeah, so it's kind of following the other industrials, right? So I said, like, you know, when banks all rally, they all rally in industrials. Not all, like we've seen semiconductors, some do, some don't. But for the most part, like there's a theme, right? More losing trades than XLI is down. I think railroads had an earnings, right? And was it NSC, CSX? I think they're all down. Not a lot. CSX dropped a lot. Okay. Levi, Las Vegas Sands, Neiman Mining. So that's tomorrow. Valero Energy, American Airlines, NOC, UPS, Honeywell. So, and others. Okay, let's talk about earnings. So Tesla. Tesla is a popular name. Everybody wants to talk about Tesla. So again, I'm looking at high open interest, where the buyers and sellers meet was the, what are they meaning? Dealers. So implied volatility move, right, for this week and next week, somewhere between 7 and 8%. That's one standard deviation. Two standard deviation would be, 15%. 15% of 200 is around $30. 210 plus 30 is 240. Roughly 240 is this two standard deviation, and you can see probably one of the highest interest in terms of open interest and strike price. So I have a tendency to gravitate over 240 if there's a positive surprise, right? I mean, obviously they're guiding down, they're not delivering robo cars anytime soon. But, if there is a positive earnings, which may or may not be, right, then it could be a 240 stock, right, like here. Right? You could have a negative surprise, right? Or you can have a negative surprise. So 240, that's $30 to the upside, or 30 to the downside is 180, probably the last highest open interest strike. So I don't have a strong opinion about Tesla. Like, it could be back to 240, or it could be, down to 180, right? Probably every earnings trade in it. So I would do two butterflies. It's a $200 stock, so on a $10,000 account, I'm not sure if it's appropriate, because you could lose more than 1% on more than $250. So, in Yellow Tunnel or Tradespoon account, but I will do it in my personal account because I have more than $10,000. So if you have more than $10,000 or like $20,000, $15,000, maybe. If you have $10,000 and you're down $400 or $500, that's probably inappropriate. If you're down 100, 200, okay. So again, I would look at the butterflies, right? And we said that the highest interest is 240, right? So 15% implied volatility of 15%. 15% is about $30, so 240. I mean, you can select 245. I'm going to look at the price, but let's do 240. Let's do middle strike. Tesla, middle strike, 240. Let's see what is the trading at. So the width of the strikes, I mean, at least 2% you want, that would be 235. I mean, ideally you want to maybe 40, $10 strike, it's about a 4%. That might be expensive. Let's do 232.5 to 40. 240 is trading at $1. So that's, you know, you might want to go a little bit further, maybe, because that's pretty expensive. Maybe 85 cents. That's, I think, is a little bit more appropriate. 250 and 250. So these 240, 250 will probably act as a magnet, at least short term, you know, that it can gravitate toward these strike prices. All right. So it could get to 250. You're risking, in this example, 49 cents to make $7, right? 14 to 1. 10% probability. If you want higher probability, like 20%, then you would do 230 to 49. Right? So that's where, you know, if you pay $1.29 for the calls, $1.29 for the puts, that's your $250. You know, if 10,000 or more, I guess it's okay. If it's 10,000 or less, probably not. Actually, let me see. It's actually relatively cheap. Maybe I should do Tesla. Tesla. Butterfly. Let's do. Okay, let's do. I can do this. Okay, so let's see. 235, 242.5, and 250. Let's see. One of 235, 242. That would actually, you can, maybe it makes sense to risk 45 cents. 20 basis points and see if it will gravitate. I thought it would be more expensive actually, but it's not. It doesn't look like it wants to fill. Could be delayed quotes. It's a large volume. Why is it not getting? Okay, 45 cents. Okay. Okay, so if you go to earnings power trader, orders. Oh, I don't have Tesla here. Okay. See here, elite. It was too expensive. Decided. Okay, so Wells Fargo. So I did close Wells Fargo. Sorry, we closed Wells Fargo yesterday for $3.82. So I'm out of Wells Fargo position, and I did put in spread for 45 cents. Selected 242.5. Let's do the same thing on the downside because it could have a negative. So 242.5 call was trading at 80 cents. So 182 and 242 is $30, almost 30. So 282.5. Put, and this is what's 182.5, and then 7.5 is 175. Okay. One, this is buy to open. One by 235, 242.5, 250. One by two by one. So buying 190 put, selling to 182.5 put, and buying 175. or debit of 36 cents, 35 cents, with the idea that it will gravitate toward $30, 180, toward 180, 182 level, kind of the largest open interest in out of the money put strikes. And it's a liquid name, so. I got filled instantaneously. That's weird. Okay, so I'm long the calls put spread, long call spread. This is where you're talking about asymmetrical returns. So I invested 80 cents, right? I can't really lose more than $80, no matter what, right? I'm locked into that trade, but I'm locked into that trade. But potentially I could make it's a 7.5, right? I did 7.5 for 80 cents. I did 242. Oh, sorry, each the call spread for 40, right? So 50 cents. So I'm risking 50 cents on call, on 45 cents on call, 35 cents on puts, right? But basically, total spread is 84 cents. So I can lose $80 or I can make $900, right? One versus reward. Probability is, still 14%, right? 10 to 14%. So that's more to the downside, right? Similar to what they did last couple earnings, right? Here it went, what did it go through? 15%, right? It did 15% here, and it did 15% here. So if it moves 15%, right, like the last two early time there, right, because we need to close the trade, then potentially, this is where you can have an asymmetrical returns, right? So I would encourage you to put small portion of your portfolio, maybe 5%, depending on your risk tolerance level and portfolio size and years of experience, 10%, 5%, 20%. But I wouldn't put, obviously, all your money into this one trade, because as long as you understand that you basically have 10% chance, I mean, granted, based on maybe current volatility, VIX is at 20, and looking at the gamma and looking at, maybe your odds are 20% or 30%, but they're not more than 50, right? More often than not, you will not make money. So that is something to consider. Any questions on the trade? While you guys are waiting, you guys think about it, and I'm gonna try to do this in my personal account. Maybe if we have time, maybe for a couple more trades. All right, full house today. Thank you for participating. Brad, Cecile, Cool, Elite, Patrick, Thomas, Jan. We have someone new. Jan, say hello. How's the trading? Any questions? Tell us about your background. How's money? Something like that. So let me do the same thing in my own account. You guys think about questions. So bear with me. I'm kind of doing it in two places. What is it? Tesla, butterfly, call, metal strike. What do we say? Metal strike. 242. 242.5. So 235, one time, 2 times 242.5, 1 time 250, 45 cents. Okay. Buy opens. Let's see. So 180. Let's see how much is 180 put. $0.58, 180 put. 48 cents. And then the put, the middle strike was 182.5. 182.5. Okay. And then 190. And then 175. 175, right? 190, 182.5, 175, 31 cents. Okay. Okay. We're done with Tesla. Okay, let's move on to the next one. We only have 15 minutes. Liquid. IBM is pretty liquid. LRCX not, and no, it's not. That's been a strong stock, kind of relentlessly going higher. Okay, one-way street, but obviously it can move. If it's overbought, it could move 10%. It hasn't moved 10%. Last couple earnings. But it obviously could be volatile. Okay, what does everybody think? What does everybody else think? What do they think? Okay. So one standard deviation move based on this Friday, next Friday expiration is 5%. Two standard deviations, 10%. We've seen these 10% move. 10% of 233 is 230.23. 23 plus 233 is roughly 256, 255. So you do have 250, probably out of the money, largest is 250. So somewhere between 250 and 255, it could gravitate, assuming you have this continuation of this multi, right, kind of just one-way trade. Obviously, the bar is set high, any disappointment, and it could go the other way, right? But like I thought so on Morgan Stanley, right? Morgan Stanley also kind of a one-way vertical move, but it made another vertical move right to the upside. So after the earnings, positioning is important. So 10%, 23, 22.50. So somewhere at 250 strike, 250 strike. And I will do IBM. Long call, second leg. Let's say 250. 250. Let's see if 250. This is 2% to 42.5. Let's see. So you can invest $1. If you do both sides, then $2 to make $5. So that's your probability of the trade. 250 is probably about 25 is pretty expensive on $250 strike. 2.5. reduced a little bit. 90 cents. Okay. 90 cents to 50. Okay, so 252.5. Let's see. Option IBM. Butterfly. Middle strike. Okay, so let's just look at the real time. So 252.5, 90 cents. Yeah. 252.5 is 90 cents. So I would stick with 252.5. Let's see, 245 strike. It's fine. 45 to 52. Yeah. That's 7.5 plus 7.5. 260. 260. Okay. Pretty popular name, especially in the past couple of years. So a lot of liquidity. And then I would do the same thing on the middle strikes. So if I selected 252.5, $20 up, $20, so 215, 250, that's true. Let's see, where's the gamma? Ooh, 220, 220. Well, 215 is expensive. Okay, 215, 220. So I would go with 220 strike. And then go to 212.5. That's good. So 220, 212.5, 7.5, and 7.5, so 205. 205 all the way to 205. This is obviously if they miss on anything, it will drop. How's SAP did? I mean, SAP initially, obviously, it's given up all of its gains, but move 5%, move up 5%. So this is all right. 220, 212.5, 257.5, 7.5. Okay. Any questions on IBM's strike price selections? The hardest part is strike prices, right? But the theory goes that if there's a high concentration of open interest, you have buyers and sellers and dealers. Dealers are forced to buy or sell stock at these levels where there's high concentration because they want to be gamma neutral. Well, they not want to, they have to. So that's IBM 250. Let's see, probably have one more. I usually do Las Vegas Sands. It's also pretty volatile name and liquid. Look at it. Or American Airline, UPS, not very Honeywell, not very liquid. I mean, American Airline, you know, definitely had a big earnings after Delta Airline hit a home run. Hasn't moved a lot. Here it has. But definitely not Delta Airline, but United Airline. That was just like a vertical move up. It's a great looking chart. Okay. So I don't know if American Airline is, I mean, usually American Airlines is a better company than United. At least it didn't go through all the bankruptcies. But, you know, it's all about perception of value. An airline, do I want American Airline or do I want Las Vegas Sands? LVS, let's look at gap positioning. Where's the LVS? How well is it positioned? Definitely somebody's buying a lot of 40 puts. Position at 40. Wow. Somebody thinks United LVS is not going to do well. Somebody thinks LVS. Oh, this is China playing. No, China. Wow. Okay. I guess LVS it is. All right. Let's stick with LVS. I don't have much time. 8 minutes. Gamma. The deviation move is 10%, $10, 10% of $50 is 545 strike. So 40.45 is maybe where it can gravitate if it's, this is also tied to China reopening, right? So there's a lot of, supply and demand. Everybody has opinion about China and want to own China exposure. So if China's stimulus is not enough to stimulate the economy, it could gravitate toward 45 strike. Let's see how much. Yeah, it's only 5 cents. Okay, very cheap. 45 strike is very cheap. 46, 47, 46.50. Okay, 46.50. Okay, so I'll go 46.50. Okay, and I want to buy. $48. No, it's 48. 48, 46.50, and then $1.50. That's 45. 45 strike. That's the 2 standard deviation would be 45. 10. Debit. Okay. So buying 248, 246.5, $1.50, and buy 2. I'm not sure why this is such a big open interest. Let's remove these. Is it just outside? Let's see next 2 weeks. Yeah, this is further out. I mean, it still could gravitate, but this is probably November, December. So somebody's concerned about December 40 strike. Okay. And that could, I mean, still could participate in the hedge, but all right. 0, 10, 0. Okay, 5 minutes. Okay. So 48, 46.5, 45 put spread, in case you agree with this person that we could get there to the 40 level, right? That will imply 20% drop between now and December. Between now and December. Well, 2 standard deviation in December, if you look at this, if you just look at December, it's still, right, December expiration, still expected move is only 10%. So this, whoever this is, has a different opinion about how far it can sell it. Okay. LVS could benefit from China reopening. So I propose to do the same trade in reverse. Butterfly, right open, call. Expiration, middle strike. Okay, so we went to what, 46.5? I moved $5 to the left, $5 to the right would be 56. So we do have 1 standard deviation. Why it says, oh, this is wrong expression, sorry. Changed it. All right, so 51 plus 5, 56. Yeah, so you have 54 high and then 55, 56. Okay, highest is 55. Okay, so we want 54 strike is 34 cents. Time 54, 56. And 57, 53, 55, and 57. Let's see if it stays at 55. Okay, 257, 53, 55, and 57. 53, 55, 57, 1 to 1. 24 cents. On earnings, Las Vegas cents. Right, let's add these guys in. So we gotta watch Tesla tomorrow. Okay, I'm out of this trade, out of this trade, out of, no, this one still in. So we have Tesla, IBM, Tesla, IBM, Las Vegas cents. Those are the earnings. Netflix is down 2%, JP Morgan down 0.5%. Let's look. So one of the bullish arguments is that yield is so overbought. After the elections or any news where the yield is dropped, then it should give momentum to the bulls. I mean, high yield is dropping. That's, you know, that's bearish sign. VIX is 20. That's bearish sign. Value stocks are not now. That's bullish sign. But you know, I don't know if it's a temporary pause or. But at least for 2 days, we're not making new lows, sitting at the support. That's bullish sign. QQQ, getting to the 50-day moving average. Not, I mean, that's a concern. Spiders able to defend 575. That's bullish. IWM able to defend 50-day moving average. That's bullish. China is stable. Bitcoin false breakout. Look, at least, well, not yet. Let's see if today's low will hold. But if it's today's low doesn't hold, it's a false breakout. That's bearish. Crude oil down. Nvidia down 3%. All right, it's 3 o'clock. You guys are awesome. Thank you very much. On YouTube, please like. If you like the video, share. Thank you for participating. Sorry it was late, but I think we covered everything I wanted. Alan, Brad, Cecile, Kula, Patrick, Jan, welcome. Take care, guys. Jan, I hope to see you tomorrow at the closing bell. Take care.